Most people are under the impression that the Bitcoin inflationary rate only decreases every 4 years at the halving event, which is when it has its major decrease. But did you know the Bitcoin inflationary rate is decreasing much more frequently than that? In fact, by the time it takes you to watch this video, chances are it's decreased even further. Today we're going to be going over the Bitcoin inflationary rate decreases and how this is a very misconception that this decrease only occurs every 4 years at these halving events. Like I said, I'm going to prove to you that chances are by the time you've watched this, the Bitcoin inflationary rate will have decreased even further. Obviously not as stark of a decrease as we see at these halving events when the inflationary rate decreases by 50%. But with every single new block coming into the Bitcoin space, the Bitcoin inflation rate decreases about every 10 minutes. If we just go here to the Bitcoin price live page here on Look Into Bitcoin and scroll down here, we can see that the current circulating supply of Bitcoin on the network is about 19.5 million. But every 10 minutes, depending on the current block reward, which is currently 6.25 BTC, every 10 minutes that circulating supply is actually increasing. Now, it's only ever going to increase to the hard cap limit of 21 million BTC. But with every single new block, reward, new Bitcoin entering the space, the inflationary rate is decreasing. So just to give a really simplified example of this, if the current circulating supply of Bitcoin was 100 BTC and the block reward was just 1 Bitcoin, so every 10 minutes we added 1 new Bitcoin to the network. After 10 minutes, there'd be a new supply of 101 Bitcoin, so the inflationary rate would be 1%. However, after that block, the next block, when there's already 101 circulating Bitcoin on the network and we add 1, the new circulating supply would go to 102 Bitcoin. So that 1% increase we saw before isn't 1% anymore, because 1% of 100 would increase it to 101. But the fact that the new flow, the 1 BTC, hasn't changed, but the circulating supply has increased, means that the new inflation rate has actually decreased. It's probably about 0.99%. Now, obviously, this is a pretty nominal difference, but ultimately, this is over the course of a 4-year period, and this change really compounds. As a realistic example of this effect in action, when the 2020 halving occurred here in May 2020, the circulating supply of BTC was 18.37 million Bitcoin. And since then, about every 10 minutes, this changes depending on the mining difficulty and hash rate, but approximately every 10 minutes since that day in 2020, 6.25 new Bitcoin have entered the network. Now, that'll take us to 2024, around April time probably, when the next halving event occurs, which will decrease that block reward from 6.25 to just 3.125 new Bitcoin entering the network. But at that point, there'll be a circulating supply of 19.7 million Bitcoin on the network, which means the 6.25 BTC block reward 4 years ago was actually about 1.82% when adjusted for an annual inflationary rate. But at the time of the halving event, this has actually decreased by over 6% to get that yearly inflationary rate to about 1.71%, which again doesn't seem like a massive difference, a 6% difference in inflationary rate. But what you need to take into account is at the next halving event, once the Bitcoin block reward decreases by 50% and we go to 3.125 BTC and the amount of circulating supply continues to increase, we're going to have a block reward so small that the yearly annual inflationary rate of Bitcoin is less than 1% and continuing to decrease. Now, really, there has to be some appreciation for the actual thought process and logic by Satoshi when he actually created Bitcoin. But if we just look to the stock to flow model here, we can see that these tokenomics really do play into Bitcoin's price appreciation favor. At first, when you see the stock to flow fair value model, whether you're a believer in the stock to flow valuation model or not, which is looking at the inflation rate compared to the circulating supply to give us this fair value, we can see that this fluctuates quite rapidly, but this is just due to the changing increase in new Bitcoin due to the, like we said, hash rate changes, difficulty changes, etc. But if we just scroll up to here, after the 2024 halving, after we've had this approximately year transitionary period where miners maybe capitulate, the miners that were potentially running on small, very thin profit margins, maybe other miners take their place, maybe we see a Bitcoin price appreciation to really increase the profits of those miners. But ultimately, we can see after this about 1 year transitionary period where we see historically a Bitcoin price appreciation to match the new decreased inflationary rate, we can see it gives a fair valuation of about $450,000, which I wouldn't complain at, certainly. But if we scroll along here from that date, we can see this actually continues to rise. Towards the end, when we see the next halving event, which is scheduled for probably around 2028, it's actually increased to around $475,000. Now, of course, this doesn't necessarily mean that Bitcoin is going to be at this price. It's not going to reach $450,000 a year after the halving and increase $25,000 in the 4 years that follows. But we can see big institutions, miners, companies like BlackRock that are trying to launch an ETF, big institutional investors, retailers that are coming into the space and getting a little bit more to terms with Bitcoin as a monetary system will be well aware of this network effect, this decreasing supply, this increasing demand. And as this inflation rate is actually decreasing all the time, it's constantly decreasing like no other asset currently available. Really, the supply and demand impacts we're seeing here is price appreciation waiting to happen. Also, if you haven't already, please don't forget to like the video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on lookintobitcoin.com, your #1 source for Bitcoin information. So just to summarize, many investors are probably only aware of Bitcoin's major inflation rate decrease at approximately 4-year intervals due to the halving event, which are the most stark and noticeable decreasing events for the Bitcoin inflationary rate. However, the inflation rate of new BTC entering the network actually decreases with every new block that enters the network, which is approximately every 10 minutes, or the length of this video. Ultimately, if this video is at least 5 minutes long, then there's a 50% chance, which means it's probably already decreased. So between the 2020 halving and the 2024 halving, the absolute rate of inflation decreased over 6% from 1.82% down to 1.71% annually. And after the next halving event, less than 6 months away likely, the halving will see the inflationary rate of Bitcoin decrease to under 1% annually, and that'll actually continue to decrease. Partner that with a potential increase in demand and a growing illiquid supply. Like we said, this is just simple supply and demand in action. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on the Bitcoin halving event, the Bitcoin inflationary event, everything we've discussed today, as well as whatever else may be on your mind. Let me know in the comments down below and on social media. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.